Good morning, everybody. It's Chris from Serene Education with the 4 Majors Notes update for the 14th of November 2013. Morning, guys. Let's have a look at the 4 Majors. Morning started with euro against US dollar, and let's have a look and see what happened yesterday. So, positive movement upside yesterday. However, you can see that price getting above the prior day, getting above the weekly fib, and then support being found on our intraday time frames, and then subsequently the buying coming through sentiment, and now we're trading into the monthly fib, the 50% monthly fib, and you can quickly see we've had a lot of consolidation around this area, so we should expect further consolidation. You can see that the indicator box is primarily blue, however we have a number of red arrows on the actual indicator, and most of those are coming pretty much smack bang in the middle of all of this. You can see that the monthly fib is in play as we speak, and if I go into the 4-hour time frame, you can see over the past 8 hours, in fact, we've had a pullback. So through the Asian session, we've had a slight pullback after yesterday's movement to the upside. The trend line too, if I just go back to the daily, you can see the swing high. We had a prior swing area, price tested this level, but then we had the bearish engulfing counter falling lower after the the interest rates cut, and then non-farm payroll, and then subsequently we've seen the euro moving higher. So this is potentially the breakout, the pullback, and now we could expect a continuation. For this to be positive yet again, would need to see price trading back above the swing low, the price swing low indicator, which is above this level here. So anywhere, have to be trading well above that area, and you're looking roughly around the 1353 and change mark. It's got to be trading above the price swing, because as long as price is making lower swings, then it's still very much in a downtrend. If she's making swing highs, then she's very much in an uptrend. So here, price swing after the interest rates announcement cut last week, and non-farm payroll, that's formed a new swing low from our highs. So therefore, for this to be positive, we would need to see price trading above the price swing in particular, and the awesome indicator to come back out here into zero. We can see everything else is in our favor for this particular time frame. So here, because we're trading into the 50% fib retracement on a monthly, we've got to be very just be very cautious about entries. So if we go down to our 4-hour time frame, you can see that we are trading into that level as we speak. Let me just get rid of this line here. Okay, so got to get above the 50% retracement on the monthly. First of all, see a lot of we have a pullback now, so I'm looking for a 4-hour candle close higher than that to give me the confirmation. We have had a pullback here, but it's still under the monthly fib, so this is just a consolidation pullback in a negative trend. So got to get above the monthly fib, back above this trend line, ideally back above the institution moving average here on the 4-hour time frame, which is above my 23.6. Then I'll know that we're very much in a positive trend yet again, and I can look to target that level. At the moment now, we're trading back within this consolidated range. She's at the underside of the monthly fib, which is a negative sign. So just got to be very cautious on this particular pair for today. On to sterling. Here again, we've had a lot of movement to the upside for sterling against the US dollar. However, this come unstuck recently as we failed to get above the prior highs we saw that were being made through September, latter part of September, going through October in particular, and now we're seeing price making lower swings. However, near term, after non-farm payroll, we had a major fall, but price has now found support at the 23.6, as it's done over so many occasions over the past couple of months. It's found support on this level here, and yesterday's bullish engulfing candle has pushed higher. It's still going to break above the prior swing low, this one over here, in order for this pair to then look positive. All the candles are still positive, so I know that long-term sentiment is still looking positive. We're above the institution. There's more blue on this chart than there is red. So got to be very vigilant here. Just wait patiently, because if that buying sentiment comes through again for sterling and she maintains above this 23.6 on my weekly here, this long support is going to be a nice building block for price, and she's going to return to the prior support and resistance level highs that we've come from. So in order to do the positive, in order to see positiveness, we got to break above the price swing low, which is this one over here at roughly around 1610 and change. So wait patiently for a 4-hour candle close above that, then look to enter, target the highs that we've just come from here above the 1623 and change mark. So drop down to the 4-hour time frame. You can see price has failed to still trade above the price swing, major swing over here, and you can see that she's trading into the institution now on my 4-hour time frame. Candlesticks on this time frame are red. We have a blue arrow, red. The RMO is still below, so in order for price to look positive long term, got to get above the institution to start with, but we want to see a lot of decisive candles once she's done that on the 4-hour. You can see we had an opportunity where price on numerous occasions broke above the institution moving average, but not once did we have a very decisive positive candle once we had the break above the institution on this time frame. In fact, she actually just fell away. There was no sentiment behind that move, and subsequently we saw price revert to the downside. So here again, if we do get a confirmed break above the institution moving average on our 4 hour, it's got to be one with a lot of buying sentiment. A nice full bullish candle to confirm that price is looking higher, and then we could target the all-time highs here back up towards that 1624 and change mark. The highs over here at the 0 level, which is from the prior swing highs to that level. You're looking at a healthy 152 pips and change. So be patient. Here again, you could be rewarded. US dollar Swiss franc, here again moving lower. Price swing lows, swing low, and you can see that price recently, after favorable non-farm payroll figures last week, we saw price breaking above the prior high, which happened to be the consolidation support and resistance level here quite noticeably at 91.64 and change. A lot of support through June, July, August, and then the breakout through September, October was resistance. Then we had the Thursday and Friday's announcement in particular. Price rallied into the 23.6, which is the weekly fib. However, they're still US dollar failing to actually take any further movement from non-farm payroll and pushing back over the past couple of days, in fact. So now we're trading back below this consolidative range. Here we're below. So this level over here now needs to maintain as resistance, intraday resistance for this particular pair. So if I move lower, you could see that the candlesticks on the 4 hour are still very much positive. And you can see that my swing is where price is tested in the last 20 hours or so. We've had a pullback, a noticeable pullback into that level. So if you want to see where price is likely to go to, you can take the all-time low over here, for example, to the current high on our 4 hour time frame. You can see that for this to look for any further buying opportunities intraday, we would need to see price trading above the price swing low, ideally above this level here, which is the 23.6 on the pullback. So nice bullish engulfing candle close higher with a blue arrow. The RMO stays above the zero level, and the OSMO indicator gets above this. Then we could target back up towards those levels, the 23.6 that we saw on the daily. However, if she maintains below this level here and she continues and we get a bearish engulfing candle closed lower, likely to get below the 38.2, then we could target the institution moving average on our 4 hour quite aggressively, which is approximately a healthy 30 odd pips, 35 pips. You take away the spread, etc., depending on how much it moves lower. But we could start looking to the downside, because as I mentioned, this would have formed a nice swing low, which is still lower than the prior one, and therefore we should start looking for US dollar to fall to the current lows that we saw all the way back here in 23rd of October. So here again, got to be very, very patient. Wait for the confirmed break, higher or lower, and then trade the outcome. Last pair of the day, US dollar Japanese yen. On the daily, you can quite clearly we had a squeeze pattern, and then non-farm payroll figures saw that break to the upside. So if I just zoom in, you can see Thursday's announcement on the euro cutting interest rates. We saw a lot of market volatility globally, and then on Friday we had the non-farm payroll figures, and subsequently price moved higher. Sunday evening, Monday, Tuesday resistance, and then this morning on the Asian session we were seeing the US dollar rally yet again against the yen and reattempting the 50% retracement on our monthly. Ideally, as I mentioned through the last couple of weeks, I'd like to see this wedge being broken, but because the institution moving average is acting as a nice support for this level, that buying sentiment is going to come through yet again for the US dollar against the yen. I wanted to see price trading above it. So the past 2 days I've been sitting there looking at market sentiment. It's rallied into this level here, however failed to close higher. This morning on the Asian session, however, if I drop down to my 4 hour time frame and you look at the actual indicator box, everything's looking very, very positive for this particular pair. So we should be looking for buying sentiment. You can see now on the 4 hour time frame, the past 8 hours, in fact, we've seen a lot of positiveness for this particular pair. It's got to close very, very aggressively above the 50% then, and then for the remainder of this week, use this 50% retracement level here, the fib level, as a support. So prior resistance needs to become new support, because as I mentioned on the daily, let's just go back, you can see that we had a number of occasions where price has been testing above it. Once we got above it, we had the pullback, which is what we wanted to see, but then we wanted to see the follow through. Here through August, we saw breakout, pullback failed to find support, breakout, pullback failed to find support. So here, very, very important. If we do get a genuine breakout today, it's got to find support this week sometime, and then we could see a positive week for the following one as price builds on that momentum, and then we could start targeting the all-time highs here, which is a healthy, back to our weekly highs, which is a healthy 366 pips away. Take away the spread, etc. You can see that it's important, though, that we give this this day and any other day to the market so we get a genuine confirmation candle. We don't want to speculate. We want to see a genuine move. If this is trying to break higher highs, got to see a break higher, close higher, and then continuation higher. Swing highs depicts upside movement, as I keep mentioning. Swing high, swing high, swing high, swing high, swing high. It's got to be making a new swing high and above this monthly fib here in order for this to be positive long term. Okay guys, that's it, short and sweet, to the point. Please, if you are using this template or any of the Serene Education templates, to back it up with sound money management rules. Very, very important. I'll keep referring it every single day until you guys get the understand of it. There, if you are using your own template, do the same. It's pointless having a really, really good strategy if you aren't backing it up with money management rules. So very, very important. Adhere to them. Wait for those confirmation candle, guys. Be patient. Those who are a lot more patient find themselves a lot more profitable going forward. I'll leave you with that. Make a note of any news announcements today, guys. There's a lot of news out today across the board, and please factor it into your trading if you are looking at any particular pairs. And there's a lot of news out. Please be very, very vigilant. Okay, I'm gonna leave you with that. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.